Welcome to PwC IFRS Talks, your source for all things IFRS, technical accounting matters, business issues, current standard setting, and regulatory updates. I'm your host, Andrea Pride. And for today's podcast, we have the pleasure of hearing from Henry Daubeney, PwC's Global Chief Accountant. Welcome, Henry.
Hi, Andrea. I'm delighted to be here and look forward to this discussion.
Great. So, Henry, sustainability and ESG have been really hot topics over the last few months, and there seems to be a lot of activity going on from standard setters, regulators, audit firms, even governments on these topics. And in particular, there's been quite a lot of interest from the investor community about how financial reporting reflects the risks relating to ESG matters in financial statements, as well as whether there is a need for a globally standardized approach to sustainability reporting. So, Henry, could you first tell us about what you understand by sustainability and ESG, how sustainability and ESG is reflected in financial reporting already, and what gaps are being found by investors and other stakeholders?
An awful lot to cover there, Andrea, but yes, now happy to work through those. I think perhaps if I start a little bit of the context to why people care about ESG or sustainability reporting. And I think it's a recognition that the old notion of a company being solely there to be a profit driver is no longer the case. It is much more important role in its impact on society, how it treats its employees, its customers, and the impact it has on society. As a result, people are starting to look at other factors beyond purely profit to evaluate the value of a company. And so sort of sustainability, or the E for the environment impact, S even for the social impact, and G for how they are governed and the way the organizations conduct themselves are really important. I think, as you know probably better than I do, IFRS is primarily focused around the profit and loss, so the financial reporting, the balance sheet, the cash flows, and obviously the notes supporting that. While clearly there are a number of other factors that are impacting the value of the company that aren't directly feeding into the profit and loss. And so this is why there is that debate that you've articulated, Andrew, that is leading to a demand for more information around additional factors that can impact the value of a company. Having said that, clearly there are certain reported items that current climate or other sustainability areas can impact. Clearly, if one's looking at impairment, and if one looks particularly in the oil and gas industry, some big players there have looked at the long-term value of some of their assets and the future prices of oil or gas, and have assessed those using what is known as a Paris Accord price rather than the market price. And as a result, we've seen some material impairment. So clearly there are judgments that impact the current financial reporting, but there are other areas that investors and stakeholders care about that impact what we call enterprise value, that aren't necessarily reflected directly in the financial statements as required by IFRS.
Thank you. So that's where the sustainability reporting comes in then, that things are not financial reporting. Where are the gaps there for investors and other stakeholders? Because I'm sure there's a lot of information out there at the moment about those other impacts as well.
I think that's a very good question. And interestingly, when we have met with some of the investor groups, they will say that actually 80 or 90% of the information that they use to judge a company on comes from the non-financial information rather than the financial information. And part of that is what one sees in Twitter and social media. It's how customers provide feedbacks on company and how employees do. Clearly, the UN Development Goals are an area that is of particular focus, and one could look at greenhouse gases emissions as clearly a numerical area that they would look to, but clearly doesn't directly impact financial reporting. Other areas that people are getting focused on, particularly if one looks at over the last year, are diversity and inclusion and the statistics around that, and also gender pay gap is another example of something that is not directly driving profit and loss, but is something that stakeholders and investors care about in organization.
So there's a huge range of different initiatives in all of these non-financial reporting areas. I think there's something like over 230 across a number of sectors, possibly more. And so maybe it's unsurprising that some see a need to improve consistency and comparability in some of that reporting. Well, what's the burning platform? What's the risk if nothing changes? And related to that, who's therefore driving the call for improvements to the situation? And then perhaps what's being done?
I think 2 or 3 questions there, Andrea. I think as you've identified, there are a whole variety of different metrics, standards and benchmarks that people have produced, which is in reality, there have been a number of niche players and there's not been the consistent message that we need numbers that are comparable. So I think there are 2 key drivers. One, there is a demand for consistent, comparable numbers and disclosures, and on the other side, there's a concern that organizations are greenwashing, which is they're cherry picking those that best present the information that they're wanting. So clearly, those are the 2 issues. I think the securities regulators and an organization called IOSCO, who is the global combination of securities regulators, recognize that this can lead to misleading reporting, and they have taken a significant effort in driving this forward. And they are working with and promoting the IFRS Foundation solution. And the good news, if you look at people who are involved in that, it is the SEC, it is ESMA, it's the FRC in the UK and other major securities regulators behind that. So there's a significant drive to come up with a single set of consistent standards that will set a base that everybody can be compared against, but also will eliminate greenwashing and people cherry picking those that present their results in the best light possible.
Yes. So you've talked about the drive from IOSCO and other regulators for the IFRS Foundation Sustainability Initiative. Why the IFRS Foundation?
I think, again, an excellent question. Why the IFRS Foundation? Why would they want to get into an area that is different from their home base, which is setting standards for accounting? I think there's two clear reasons. One, I think they have a very high reputational brand in the IFRS, so there is respect globally, and there is nothing currently within all of those bodies that currently issue ESG standards, frameworks, metrics. So I think that strength of the brand is clearly one thing. I think the second thing is their core is standard setting, and actually what you need is standard setting. So a lot of the constitution, a lot of the experience of the organization that already exists is standard setting. And also there is going to be a relationship between what is the financial reporting and what will be the sustainability reporting. So those aren't islands that don't meet. There is going to be overlap and interconnectivity. And so bringing the expertise that the IFRS Foundation and the ISB have to this area is without doubt the right solution.
Okay. And so the IFRS Foundation is currently consulting on targeted amendments to their constitution so that they could accommodate International Sustainability Standards Board to set these sustainability standards, and which could achieve the result that you're describing. How do you see the relationship between sustainability reporting and financial reporting in the future? Do you think that given that 90% of what investors look like is non-financial, will sustainability render financial reporting obsolete?
I think absolutely not, because if I go back to where the analysts were at, clearly the financial reporting is the foundation, is the base that they do their analysis from. What they're trying to find currently is other data that correlates to that, so that helps them understand what impacts enterprise value. So I think there is definitely an interrelationship between the financial reporting and what the ISSB will look to do when it comes into existence. And I think that clearly, I think as we discussed earlier, enterprise value is not just profit. It is the impact that a corporate has in society. So the two are without doubt related. And I think putting those under the umbrella of the IFRS Foundation is a very positive step.
Great, thank you. So standards are all very well, but they're only one part of it all. So could you tell us a little bit about the role of assurance in all of this?
Absolutely, the message that we are hearing and the ISSB are hearing is they want data that is consistent, but is also trusted data, and the mechanisms by which the users of that information can get the trust is by getting a highly reputable organization with a relevant experience to provide assurance over that data that gives it credibility, both from the reporter's perspective, but also from the user's perspective. I think underpinning clearly the financial reporting is the audit opinion, and I think there is a lot of demand for this over the sustainability data. To be honest, many companies issue sustainability reports, and many of those receive assurance currently. So I think the creating of this single set of standards and requiring assurance on those is something that the market is looking for and demanding, and is really important to make sure the information is quality. I think the other element that it provides is to avoid, or at least highlight, where greenwashing is occurring, where people are claiming to have ESG credentials that are not reflected in the real behaviors and performance of the organization.
And I think that brings me to my last question, Henry. You've talked quite a bit about trust, and in a changing world, these are clearly important in the whole sustainability discussion. Could you tell us a bit about how ESG, sustainability reporting, trust and change all fits into the new equation for PwC?
Absolutely, Andrew. I mean, clearly, as I said at the outset, the role of the corporation or a partnership in the sense of PwC is much more than its P&L. Its impact on society and how it helps society evolve, and purely from PwC's purpose, is to help solve complex societal problems and build trust around those, and actually being there to help companies across the whole remit in thinking through its strategy from an ESG perspective, to turn that into the operations and transforming its business model to a sustainable business model. And then ultimately, as we've been talking about, how does one report the metrics to demonstrate the achievement that one has in delivering that strategy, and ultimately the assurance that gets provided across that is core to helping our clients achieve their goals of being a sustainable organization and contributing to the needs of society.
So there's a little bit of put our own house in order before we help others as well, I think, in there.
Clearly, we have to live the story. Absolutely. We have our own sustainability reports. We have made our own sustainability commitments. Our firm has signed up to the FIBC metrics and committed to be net zero by 2030 globally. We have to live and breathe this. You're right, Andrea.
Thanks, Henry. So I think that's been a very interesting discussion. Thank you for sharing your thoughts with us, and thanks for joining me in this podcast. And thank you too to all our listeners. Just to say that we are coming close to a pause in IFRS talks in the summer. I think we might have one more after this one, and then we'll take a summer recess before being back in the autumn. So in the meantime, please stay safe and happy accounting.
The preceding programme was brought to you by PricewaterhouseCoopers LLP. This content is for general information purposes and is not a substitute for consultation with professional advisors.